Hello and welcome to another edition of Real Talk. Well, what a bittersweet result the weekend was. Bitter for those who wanted affordable housing and obviously a Labor government, and sweet for those who were after the coalition. From our point of view, we're absolutely relieved. In fact, I felt a little bit lost with myself on Monday. The polls were indicating that Labor were going to get in, so we were all ready to roll with all these informations and updates as to how we were going to cope with a Labor government. But here we are, a coalition government. So Scott Morrison was interviewed at the press club on Monday, and he said a couple of really key things for us. He said, I've made the changes I'm going to make to depreciation on investment properties, and that's basically that if you're buying from the developer or brand new, you get full depreciation. If you're buying a secondary property, you forego any depreciation. So that's the first change he made last year. And the second one was no more travel deductions to and from your investment properties. And he actually came out at the press club and said, that's all the changes I'm making. So that is an absolute sigh of relief for those of us who've invested heavily into property and are relying on negative gearing. Obviously, the share market spiked with the surprise win of the Liberal Party or the Coalition Party staying in government, but the analysts are saying that'll be short-lived. Obviously, the banks have really benefited with the news because interest rates and the whole lending policy is under current review at the moment. And what it's going to mean is that the government's now putting pressure. It was actually on the ABC this morning. The government's putting pressure on APRA to go a bit lighter on some of these criteria for investing, for lending of money, because it's so tough for investors at the moment. Interestingly enough, the favour is all towards first home buyers, but they've come out and said that a lot of the initiatives around using contributions from super fund for deposits was really not well received, or not well taken up at least. So first home buyers are still doing the old fashioned squirreling the money away and just having their sights set on securing their first property. I think interest rates will possibly go down. They're talking about 0.25% relief, but I actually don't think that the banks will pass it on. I think that they're at an all-time low. There's no compulsion to pass it on. It's obviously not seen well if they don't, but I have a feeling, or the talk on the street is that if there is, that they will hold it. Cash rates remain good. We've got obviously fixed rates in low fours, variable rates in mid fours. Some of mine have crept up recently. I've opened a bit of correspondence and found your home loan's gone up to 5.2, so I'll be back on the phone. And I really encourage you to jump on the phone and talk to your banks, or give Simon a call if your loans are creeping up a bit, because what you've got to remember is there's not a lot of lending happening at the moment, so your business is more valuable to them than ever before. And I noticed the statistics came out recently that on average Australian properties transact at about 450,000 sales a year. They're down to 350,000 sales. And I did a rough calculation. If you look at the median house prices around Australia and you actually divide them all up and come up with an average, the average median house price around Australia is $733,000 at an average of 5% stamp duty to the government. They're actually missing out on $3.5 billion in revenue. I don't know where they're going to make that revenue up. So all of this putting the brakes on, putting the brakes on, putting the brakes on, what they really needed was a feathered approach. But now, of course, with APRA tightening lending policy, I know it's been tough for me, it's been tough for clients, it's been tough for family and friends. Everyone's finding it really difficult. So if you can get money at the moment, it's gold. So let's talk a little bit more about the future of investing. I think that we've seen, because the figures are always about 90 days in arrears, currently what I'm seeing is properties that might have sold for $450, $475 are actually selling for about 5% more at the moment. I'm talking specifically about apartments at the moment. So I have seen from the December quarter and the January quarter, I have seen at least a 5% improvement. Obviously, the transactions are, as I said, 90 days behind with all of the reporting, but CoreLogic will start to come out with things. So I really think we're going to see a bit of an easing. Most excitingly, what I have seen is first home buyers are embracing for the first time ever apartments. as a place that they want to call home. I think they're really enjoying the amenity, the proximity, the pubs, clubs, bars and restaurants, and the work-life balance. So rather than buying in Cranbourne, Pakenham, Tarneit and places further out, they're finally coming right into the fray, into the hot spot for us. So obviously investors wanting to realise selling right now, it's a tough time, but I do see a bit of a warm glow on the horizon. Anyway, my time is up by now. I want to thank you all for listening, and I look forward to joining you again next week. Thank you so much.